This is the blueprint that can turn 5 million naira into over 65 million in the next 10 years. But for that to happen, we must confront the silent thief that is actively liquidating your wealth right now. Your Nigerian bank account is a leaky basket with inflation over 30%. 5 million naira is not just sitting there. It is actively losing over 1.5 million in purchasing power every single year. Now, this is not just a video, this is an intervention for you. Now, that is a mathematical reality of holding a depreciating currency in a high inflation environment like ours. The traditional advice of just saving your money is now more dangerous than ever, and it's the worst you can follow. The game has changed and you need a new playbook. Now, this is not about gambling. This is a strategic 5-part blueprint that I'm going to share with you that builds resilient global portfolio from right inside Nigeria that you can achieve amazing returns. The first one, the emergency fund. Second, dollar-denominated fixed income. Third, dollar-valued real estate. Fourth, US growth stock ETF. 5, leverage growth. I'm going to break down what each of this means and the specific returns that you can expect and the exact platforms you can use to implement that strategy today. By the end of this video, guys, you would have everything you need to take action immediately. So welcome back to WealthMotley. First, the foundation, that's the emergency fund. 10% of this money, or 500,000 naira, goes here. This is non-negotiable. Studies show that a single unexpected bill can push millions of families into debt. For many in our community, an emergency isn't just like a car repair. It can be an urgent call from home. This fund is the wall between you and financial disaster. But leaving it in a regular bank account that is earning less than 5% is financial suicide. So we put it in a high yield savings account like PiggyVest or Carbon or optimus.ng, which offers a staggering 20 to 25% in annual returns. This is how your emergency fund actively fights back against inflation. Second is our currency shield. We allocate 20% or 1 million naira to dollar-denominated fixed income. Now, why is this a power move? In 2015, 5 million naira was worth less than $12,000. Today, it's worth less than 6,000. That is a catastrophic over 50% loss in value. It is a survival strategy. A platform like Risevest offers guaranteed return of 10% annually in dollars. That is your anchor in a storm. Third, we build passive income. We allocate another 20% or 1 million naira to dollar-valued real estate. With fractional platforms like Keble, you can own a piece of a rental property in US, in UK, and co, and you can earn rental income in dollars. You are tapping into one of the most stable wealth-building assets in the world. The US real estate market has historically appreciated at an average of 4 to 7% per year on top of your rental income. With platforms targeting an average annual yield of about 14%, your total potential returns is very significant. Fourth, we're going to look at what I call the engine. We allocate the largest portion of money here, 40%, that's 2 million naira, into US stock markets using platforms like Bamboo or Trove or Hisa or Vest or optimus.ng. We're buying ETFs, exchange traded funds. Now we're splitting our 2 million evenly here. 1 million into VUAG and another 1 million into VGT. Now let me break those down for you so you understand why this is a serious power and smart move. First, the VUAG. That actually means Vanguard Growth ETF. Think of VUAG as an all-star team for you. It holds 200 of the largest and fastest growing companies in America across all major sectors. So the companies in this one fund represent over a quarter of the entire US stock market value. You're not just buying stocks, you are buying a piece of engine of the global economy. Over the last 5 years alone, this ETF has returned about an average of 15% per year. Yeah? Next, VGT. Now, the Vanguard Information Technology ETF, that's the full name. If VUAG is the all-star team, VGT is the special forces unit. It holds around 300 companies, but only from the tech sector. The tech sector alone is valued at over $13 trillion, making it larger than the entire economy of most countries. By buying VGT, you are becoming a concentrated owner of the digital infrastructure that is running the modern world as we know it. Because VGT is more concentrated in tech, the returns here are much more higher than the VUAG ETF, averaging about 20% per year in the last 10 plus years. However, the larger the rewards here, comes with higher risk as well. So by splitting our investment 50-50, we get the best of both worlds, broad stability of VUAG and the higher growth potential of the VGT. You see the sense there. Finally, our last 10% of 500k remaining of this 5 million we're investing. This is our leveraged growth allocation. This is for the bold. It's for you to be bold about. For this, we're looking at a specific tool, the ProShares Ultra Semiconductor ETF. This one is a secret. I don't tell people often. Think of it as an investment fund focused on the semiconductor industry, designed to be high performance, high risk tool. Let me break this down first, yeah? Let me break this down. First, semiconductors. These are the tiny brains or microchips inside every piece of modern technology. Your phone, your computer, your car, everything uses these microchips. This fund tracks an index of the major US semiconductor companies like Nvidia, like Broadcom, like Intel. So when you buy, you are getting exposure to all of them. Now, this is the most important part of this ETF. The Ultra name there. This is ProShares name for 2x leverage ETF. It uses financial tools to try and double the daily performance of that semiconductor index. So imagine you're pushing a child on a swing. A regular ETF is a normal push. Now, if the swing, in this case, that's the index, goes up by 1 foot, you pushed it to 1 foot. The Ultra ETF is like having a friend pushing with you. If the swing goes up by 1 foot, your combined effort sends it to 2 feet. This is incredible when the index is rising. If the semiconductor index goes up by 1% in one day, this particular ETF aims to gain 2%. But the same rule applies on the way down. If the index loses 1%, this ETF will lose 2%. This is the part that trips up most investors. You see, this ETF is designed to be risky. It hits 2x of the goal in every single day, and it also resets its leverage every single day. So because of this, its performance over a month or a year can be very different from just 2x the index return. So in a choppy, volatile, high risk market and co, this ETF could lose a lot of money if the semiconductor index is just flat. That's because it resets each day and can eat away your money. But then when it grows, oh my God, does it grow? It's like on steroids, yeah? Because of the complexity, this is something you need to understand, that you need to buy, hold, sell, sometimes make money off it. It is best suited for people who want to be sophisticated and have something that gives you high risk. So it's something that is very strategic. And for our blueprint, this 10% is a calculated bet on a powerful industry, but we go in with our eyes wide open to the risk of this 10%, yeah? So there it is, this 5-part blueprint I promised you. The real genius here is the structure, is how you have managed our risk. For low risk, we've put 30% of the money into low risk investments in emergency fund, in dollar fixed income. We've put 60% of the money into medium risk investments in the dollar real estate, in the VUAG, and in the VGT. We've only put 10% of the money into high risk. A massive 90% of the capital is in low to medium risk assets, designed for stability and strong, steady growth. Only a tiny 10% has been put in high risk play. This structure is designed to be resilient, to grow consistently, and to let you sleep at night. Do you get it? Now, for the most interesting part, what could this blueprint actually be worth? Based on these historical averages, and this is not financial advice in any way, in 5 years, your initial 5 million could grow to as much as 15 million without you adding $1 single or naira to it. But here is where you get the life changes numbers I promised you in the beginning. What if you started with just that 5 million that you have right now, and each month you add just 100,000 naira to it, or just $50? In 10 years, you could have over 65 million naira. That is the power of a strategic plan and consistent action, from 5 million naira only to over 65 million in 10 years. That is the beginning of generational wealth and smart thinking. This is about more than just numbers. This is about taking back control from a system that is actively devaluing your hard work. This is about building a future where you are not at the mercy of inflation. It's about having the power to say yes to your dreams, to support your family with strength and not with stress. Remember that leaky bucket we spoke about in the beginning? This blueprint is how you patch that hole, or you change it to an entire new perfect bucket. It's how you turn that leaky bucket into an ark that will carry you, carry your family, carry your generations towards financial freedom. So the cost of inaction here is a guaranteed loss. You are working too hard to let your money sit in a bank and just disappear without giving it a fantastic job to be doing in assets like this that are diversified. So here's my charge to you today, not tomorrow. 1, go and open a high yield savings account on PiggyVest, or just anywhere you are in the world, you can find a high yield savings account and move your emergency fund there. Number 2, go to Risevest and start a dollar fixed income plan. Number 3, download Bamboo, True, Chaka, any of them. Buy your first fractional share of VUAG or VGT. Take one concrete action the second this video ends. And if you're watching from outside of Nigeria as well, the principles are exactly the same. For my people in the UK like me, you can find high yield or high interest savings account Hisas offering up to 7%, 5 to 7% a year for your fixed income portions. You can do it on NatWest, you can do it on Trading 212, you can do it in Trove. For your stocks, you are buying the UC ETFs versions of these ETFs I've discussed. Very easy, XLKS, VUAG, etc. The platforms are different, but the blueprint is exactly the same. The time for excuses is very much over. The time for building, guys, is right now. The world is at a place where every one of us, every person has to be investing more than they're saving. And to make it even easier, I have created a free downloadable PDF that you can use to invest today. It's a simple ebook for the new investor. It has all the layers and all the platforms. The link is right at the top of the description below. And now I have a question for you. Which of these steps are you going to take first? Let me know in the comment section below. I want to hear your first move. So stay wealthy, stay blessed, and I will see you in the next video.